So one of the positive figures Chewy reported in the quarter was second quarter 21 million active customers, reflecting 4.5% year-over-year growth. Remember, this is a metric Chewy had difficulty with coming out of the pandemic when the economic reopening hurt its competitive advantage because now it was competing against brick and mortar businesses again, whereas during the pandemic when businesses were locked down and people were avoiding shopping in person, Chewy gained a lot of customers, and those customers, not all of them stuck around with Chewy. Of course, not all of your customers stick around, unfortunately. And so now that this number is increasing again, it was certainly positive for Chewy stock investors. They also mentioned that they continue to expand customer share of wallet in the quarter, with the net sales per active customer reaching $591, representing 4.6% year-over-year growth. And Chewy has highlighted to investors that the longer a customer stays with Chewy, the more they spend with Chewy. So $591 is a trailing 12-month number, and it keeps increasing. And the more a customer stays with Chewy, the more they spend. And that makes sense, and that's true of almost every business, every good business, that is. If you deliver a good customer value proposition, your customers find new things to spend with you because they like the value they're getting in return for the money they're spending. For the second quarter, the company said the main drivers of gross margin were both the fast-growing advertising business and a favorable mix into premium categories. This advertising business has been positive for many of these kinds of businesses: Amazon, Walmart, eBay, Target, Home Depot. All of these companies are utilizing sponsored advertising to help facilitate higher margin revenue, to help monetize from all of the customer visits they get on the website, and to help drive more sales and provide businesses and others an opportunity to show their products to their customers. So the company generated $183 million of adjusted EBITDA in the quarter, which is a profitability metric, and that represented 5.9% margin and a year-over-year increase of 80 basis points, or in other words, it increased from 5.1% to 5.9%. They also generated nearly $106 million of free cash flow in the quarter. And that's great news for Chewy, especially because this is not an asset-light business model. This is one of those capital-intensive business models. They do deal with warehousing and logistics and delivery, which are very expensive, very heavy capital industry. And to generate these kinds of margins already at such early stages of development is certainly good news for Chewy stock investors.
Click the link below to watch the full video.